How's everybody doing today? So I was trying to have an optimistic attitude this morning, despite it being Monday or Wednesday. Okay, so you guys know how I feel about Wednesdays. So I was waking up, so you know what? Maybe it's all about the attitude. Just wake up and I'm gonna be positive, optimistic. Cook myself a good breakfast. You know, I take the time to make sure that I'm well fed. So I get up, I get ready to go take my shower in the morning, and bang my head against a door. Okay, ruined my entire day. Ruined my entire day. So if I'm a little bit cranky, it's because of that stupid door. You should stop putting doors in the way of things. So all right. So just as a reminder, we've got in 1 week exam number 1. And so that's time flies when you're having fun, or time flies when you're a Truman student, one of the two. So practice exam, study guide, all available on Brightspace. Please start working on those, thinking through those, sending me questions. As was the case with AIS, I don't cover every single detail in the study guide. I cover the things that I think are the most relevant. So come prepared with questions if you see something in there that you're not familiar with, or send me an email when you're studying. Either one of those is fine. Today, we're going to wrap up chapter 5, which is our final chapter before the exam. We're going to start out with a talk about documentation. So I really want to, so documentation is one of my least favorite things to talk about because it's similar to budgeting that you all learned back in 221. It's often used as a bludgeon rather than a tool. I do think documentation serves a purpose, but oftentimes people will look at documentation and say that documentation is not appropriate, or it's not there's not sufficient amount, and it's very, very subjective as far as how they're measuring it. So I'm going to try to teach you the best I can. I do kind of have negative feelings about documentation, also because it's a Wednesday. You all know about that. But when I use the word documentation, you may also hear me use the terms work papers or working papers. You may have actually heard those terms before previously. Those, just like a lot of other things in this chapter, those are also common vernacular for work papers and working papers. I suppose I should listen or read my note that's in my slides before I get to this. So before we start out documentation, let's go ahead and just review and refresh what we talked about on Monday. So remember, this all talks about collection of evidence, and this is going to be how we document evidence, but let's just go ahead and talk about the assertions and evidence that we talked about on Monday and make sure we're fresh. So I told you that there were effectively 7 management assertions, though I gave you a list of 8. What are the first 3, the primary 3 that I talked about? One's the recording assertion. Which one's that? Yeah, completeness. Yes, and then the other one's the opposite, saying something's been recorded. We need to make sure it took place. What's that one called? Existence occurrence. Good. And then we have one, make sure the amounts are recorded correctly. What's that one's called? Yeah, valuation allocation, actually, VAA. Okay. Those are our primary 3 assertions that we're concerned about, but then we had some that are kind of unique. We had one that's limited to account balances, the assertions on account balances, that's talking about certain responsibilities for assets and liabilities. Does anybody remember what that one's called? Rights and obligations. Good. Okay. Then we had 2 related assertions. One's a PCOB assertion and one's a ASB assertion. They're related to how account information is acknowledged or treated within the financial statements. What are those called? Classification. That's the ASB assertion. Presentation. That's the PCOB assertion. Good. And then we had one that that's a recording assertion, but it relates to whether it was recorded in the correct period. Which one's that called? Cut off. Then we have the one that's not a real assertion that I'm not going to question you on, but what is it called? Authorization. Okay, authorization. All right, so remember, collecting evidence, we're trying to collect evidence about assertions. We're trying to collect evidence that's related to these assertions, and we talked about those the different phases of the audit. So just a reflection, let's just go ahead and list out the assertions, and we'll talk about the phases. So three of our big types of evidence are the ones that we can use during any phase of the audit. The primary one is accounting records, or what did we call that? How do we characterize that? Inspection of something. Inspection of records and documents, okay? And that's probably our biggest one because it provides moderate levels of assurance and it's a versatile type of testing. There are 2 types of specialized types of inspection records and documents. One tests existence occurrence, one tests completeness. Which one tests existence occurrence? A 50-50 chance. The other one. Vouching. Yes, vouching. Okay. And then the one that says completeness is tracing. Good. And the way that we remember that is completeness is a bottom to top test. Okay. And it looks like the T pointing upward. Okay. And then vouching is a top to bottom test, which is the V pointing downward. Okay. So those are special tests of existence, occurrence, and completeness. Then we have two other types of evidence that are very, very versatile, but not very reliable. One is just going and viewing things. What is that called? Observation. And one is talking to people. That's called inquiry. Good. Okay. Let's go ahead and flip the script. Let's talk about the really high levels of high level reliability assertions. Okay. So those are three that are really important because they're used in a lot of situations. We have three very reliable, not assertions, evidence. We have three very reliable types of evidence. One of these is where we just go out and we actually look at the asset. What's that called? Inspection of tangible assets. Okay. Then we have one where we just redo the math that the client provides us. That's called recalculation. And then we have one where we redo any task that the client does. We call that reperformance. Okay. All right. And then we had kind of some middle tier ones, some middle tier assertions. So I believe we kind of have, how many of those we have listed out? So I'm going to forget all of them, but we have one that's a third party request. What is that called? Confirmation. Okay. And then we have one that is basically developing a model for expectations or analysis. What do we call the analytical procedures? Yes. And I am definitely forgetting one. Okay, hold on. I'm gonna open my notes. Oh, wait a minute, I got them right here. Hold on. Let's see. No, I got them all. How about that? All right. So yeah. Okay. Yeah, that's what happens when you get old. Okay. You just start forgetting things. So yeah, real quick. We talked about certain types of evidence can only be used during certain phases of the audit. So we have our risk assessment phase. That's kind of the first time we can actually collect any assurance. Four types of evidence can be collected during the risk assessment phase. Three of these you should know right off the top of the bat. Observation, inquiry, and inspection of records and documents. Because remember, those three can be used during any phase of the audit, okay? What is the fourth that can be used during the risk assessment phase? Analytical procedures, which we're going to talk about a little bit here in just a second. Then we have test of controls. Test of controls have the same three that we're going to start with: inspection, record documents, observation, inquiry. Then there's one that's almost used exclusively in test of controls. What do we call that one? Very high reliability test. One of the REs. Not that RE. Reperformance, yes, reperformance. Okay. All right. And then we have substantive procedures, which is two subphases: substantive analytical procedures and substantive test of details. For substantive analytical procedures, only one type of evidence can be used to collect during that subphase. Which one is it, do you think? Analytical procedures. Good guess. Yeah, good guess there. And then any other type of evidence can be used during substantive test of details. That's our catch-all. That's what we do the remainder of our testing. So remembering what types of evidence applies to what phase, really, really important to note. Oh, by the way, we also had during test of controls, I said that there was one special one that was kind of combination of all the rest. Does anybody remember what that one was called? So I said that there was a fifth one, but it's not in the list. It's called a walkthrough. It's basically a combination of all those. And confirmation can be used as a test of controls, right? What did I say about confirmation and test of controls on Monday? I was very emphatic about it. Never used as a test of controls. Never. By the way, never doesn't mean sometimes. It means never used as a test of controls. Okay. All right. Now that we got that out of the way. Documentation. Audit documentation provides three basic functions: to provide principal support for the representation in the auditor's reports that the audit was conducted in accordance with generally accepted auditing standards. So basically, it's a little bit like me saying, did you do the homework? Yes, I did the homework, Dr. Barnes. I said, show me your homework. This provides support saying that you did the work that you attest that you did, okay? It also aids in the planning, performance, and supervision of the audit. So we use documentation to determine what's done, what needs to be done, and what will we do in the future, all right? Finally, to provide the basis for the review of the quality of the work by providing written documentation of the audit or the evidence supporting the auditor's significant conclusions. So somebody is going to look at this documentation at some point in the future, and they're going to make sure that this documentation supports the auditor's opinion that's issued. This will be done multiple times. The documentation will be aggregated. You'll probably have a senior associate that will look over your work that first year. Then you'll have a manager look over it, then a partner, then an external partner, and then possibly even the PCAOB. So we want to make sure the audit documentation is clean and follows a certain path so that people can look at it and determine what happened here and is it consistent with the opinion being issued. So principal record of audit, because the documentation provides the principal support of representation of the audit report, it should provide the information regarding the compliance with auditing and related professional practice standards. So did we follow the rules? Did we follow the standards of the profession? Secondly, the basis for the auditor's conclusions concerning each material financial statement assertion and evidence the underlying accounting records agreed or reconciled with the financial statements. This one's an important one, by the way, because at the very beginning of the audit, sometimes not nearly at the very beginning, you'll have to wait sometimes because some clients are not nearly as organized as you'd like them to be. But theoretically, at the beginning of the audit, you're going to say, hey, client, can you please give me the trial balance so we can try to make sure that we can have a basis for audit? You're going to look at that information in that trial balance, and then when you test, you're going to confirm that the work that you're doing is consistent with those numbers in the trial balance. That's basically how the audit is set up. So audit documentation should enable a reviewer with relevant knowledge and experience to understand the nature, timing, and extent, and the results of procedure performed, the evidence obtained, and conclusions reached. Basically, anybody who looks at this should understand exactly what you did and how you did it. It should tell a story. It also needs to determine who performed the work. By the way, make a note of that. You have to determine not just what was done, but who did the work, and the date such work was completed, as well as the person who reviewed the work and the date of the review. This is kind of interesting because I want to point something out to you that we haven't really alluded to, but something that you might be familiar with. Let's go ahead and take a look at those earthware materiality work papers. And this is all the earthware documents. But you see these, they're called work papers. What did I say at the beginning of the lecture? I said that's interchange or vernacular for documentation. So you've seen those terms, whether you realized it or not. What have we got up here? We've got some information relating to what this work paper is, and there's initials. Why are those initials there? To identify who did the work, okay, and when they completed the work. There would also be probably some other initials over here that said who reviewed the work and when they did that as well. So we've seen this already. That's just not been put in context because we hadn't reached that chapter yet. All right. So some examples of audit documentation. It generally falls into one of two categories. The first category is called the current file. And as you probably can figure out, the current file relates to items that are relevant to the current period under audit. So the financial statements and the auditor's reports, the audit plan and the programs, copies of minutes from important committee meetings, working trial balance, adjusting reclassification, journal entries, working papers supporting financial statement accounts. Basically anything that relates to what's going on for the current period goes into the current file. In contrast, we have items called the permanent file. These are things that do not change or change relatively infrequently related to our client. This could be the corporate charter, the chart of accounts, the organizational charter, important contracts, documentation regarding internal controls, the design of controls, terms of stock and bond issues, our prior year's analytical procedures results. Anything that's in our permanent file we want to have used as reference for our current period, but these are usually items that are fairly static. That is not to say they do not change. It means that they change less frequently than the items in our current file. So it's pretty straightforward concept. There's going to be some questions on the homework about that, but this is what you need to keep in mind is that falls into usually one of those two categories. All right, this I think is the most important slide relating to documentation, one that I tend to ask a lot of test questions about. The manner in which documentation is formatted generally contains three characteristics. First of these is going to be the heading, okay? This is just like you would consider like a heading for a paper. If you were looking at the title, the heading is going to explain what the documentation represents and what is the period under audit that it represents for. So basically a title for the working paper and then what it relates to, with the client and the period under audit. Next, we have indexing and cross-referencing. And you may say, Dr. Barnes, those sound like two things. And technically they are, but they do relate to one another. So let's think about how it is that you would find something in a book. So I'm going to assume that if I told you, I want you to read about this section of the book, and I didn't give you any reference to it whatsoever, that you would not pick out the book and you would not read until you found that information in the book. I mean, if you did, good on you. You've got more free time than I do. All right. But if I said, all right, I want you to read up on the completeness assertion. Would you just go through and start reading until you found completeness in the book? No, you'd probably try to shortcut that somehow. What would be some ways that you could shortcut that? Look in the table of contents, say, where does completeness occur in the table of contents? There's also a thing in the back that you can look at, the index, okay, that you could actually refer back to it. Same theory holds true here. The index is effectively a table of contents or an index for the working papers. We want to actually be able to let people who are reviewing the working papers know this is where particular items are going to fit within the working paper hierarchy. Section A might deal with the client documentation related to the trial balance. Section B could be assets, or sorry, section 1, section 2 could be assets. Section 3 could be liabilities, so on and so forth. And then we'd have working papers numbered accordingly, okay? So we want to make sure that we have indexing so people can find what it is they're looking for within the working papers. Yes?
People still like payroll with numbers and letters.
It's
digital now. Is there less reliance on like
so there's still usually going to be labels associated with that. There's still going to be explicit indexing. I don't know that's as necessary since it is electronic, but it tends to be one of those holdovers from when it was still paper-based systems. So, and I think possibly one of the big reasons for that is simply because it's not clear for some audits whether or not there's going to be it's going to be from a large company audit or a small company audit. Like say, for example, you had a transfer of a client from a CPA here in Kirksville to like a Big Four accounting firm, which that would be a pretty big transition. But the CPA in Kirksville probably does a lot of paper-based work, whereas the Big Four accounting firm does electronic work. Although interestingly note, I worked KPMG until 2010. Guess when they started doing electronic audits? It was after 2010. So, it's not as a common phenomenon as you might think. It's grounded a lot to generational preferences. We also have cross-referencing, and this one's kind of an important one. This is one that I think is very, very overlooked and very undervalued. So remember that I said that the information for our testing comes from the trial balance. So logically speaking, the trial balance should be put in the working papers, and it is. It's a part of the working papers, at the very beginning of the working papers, in fact. So whenever I was doing let's say I was doing accounts receivables testing, I would want to know the balance that I'm trying to test for accounts receivable. Where does that come from? From the trial balance. So I could say this working paper, so C27 or something like that, the number that's at the bottom of this working paper relates to working paper A2, which that would be relating to the working paper that I'm talking about. Then going to that, if I went to the trial balance, I could see tested in C27. So I've got in my trial balance a reference to where the accounts receivable working papers are in my working paper. And then in the accounts receivable document, where the bottom balance is that I'm testing, it refers back to the trial balance. That's a cross-reference. That's referring back to pieces of information that are kind of redundant to one another. Then finally, we've got tick marks, which tick marks are just vernacular for shorthand notation. It's like, has anybody ever looked at a map and see that little square in the bottom that kind of explains like symbols that are used on the map? So that's a legend, and that's the same idea for a tick mark in a working paper. Some examples of this, if you want to look in the book, it starts on page 147 in the textbook. So here's the header. Here's the header elements that we're talking about. So earthware clothiers, analysis of legal and audit expense, the date. Here are some also items of the headers that we're talking about. This is the working paper index. Here's the initials of the person who created the file. Here's the date that was created. Okay. And then tick marks, you'll see down here, we've got some tick marks. We've got a V, an F, and a T/B, and you'll notice that these are used up here. Why do we actually have some tick marks that are used multiple times? Has anybody ever seen the opening to The Simpsons? The cartoon strips. I know that's a really old cartoon. It's like, yeah. So Bart's writing on the board, is writing many, many times, which used to be a form of punishment on chalkboards. They still do that in schools anymore? Good. That sucked, so yeah, but he's writing on the board. It's kind of the way a working paper works, is that we're going to have maybe 100 different things that we're trying to test. It would get really monotonous typing that out or writing that out every single time. Okay. So a tick mark is just basically saying, if you see this letter V, it means that we examine the payee's bills for amount and description. And every single time you see that, that's going to be what that represents. And then I do want to kind of talk a little bit about cross-referencing. So this is a little bit later on. So we can kind of see that we have multiple working papers here, and these working papers all refer back to one another. So information that's in the cash lead schedule is going to be referring back to the trial balance, and the trial balance refers back to the balance sheet, but they all refer back. You can see the arrows move in both directions. That's the idea behind a cross-reference. This is not as nearly clear an illustration as this one. I do think this is a great illustration of documentation and all of those elements, but all of them are important, especially that cross-reference concern. Anyway, so Sarbanes-Oxley Act and the PCAOB standards require that audit documentation be retained from 7 years from the date of completion of the engagement, unless a longer period of time is required by law. So basically, once you finish the audit on a public client, you have 30 days to archive that information, to get it to storage, and that storage has to be retained for 7 years. The only time that that's an exception is if there's usually a legal proceeding or some sort of inspection proceeding where they say, all right, you need to continue holding on to this because we're not done with that information yet. All right, that kind of does it with documentation. We will definitely be referring back to some of this information later on, especially once we get to specific procedures. But let's talk about analytical procedures now. So analytical procedures, powerful and versatile method for collecting audit evidence and obtaining assurance. They're often utilized at different phases of engagement. We've talked about 2 of these and alluded to a third one. So risk assessment, substantive testing. We also use analytical procedures near the end of the audit, and they serve 3 different purposes. Preliminary analytical procedures are basically to get an overview of what the organization looks like with a very high level. It also gives us some insight about what areas that we should probably potentially look at, given some of the trends or the observations that we make with those testing. Substantive analytical procedures, these are usually more complex models where we try to develop an estimate and rely more on those estimates than actual testing of the account. And then final analytical procedures, these are after all the adjustments are made. These are where we try to determine, do the numbers make sense? Do they look reasonable? Are they consistent with our expectations? So analytical procedures can vary greatly in scope and complexity, but generally fall into one of these 3 categories. Trend analysis, the analysis of changes in account over time. You should probably remember this from 221 or from your financial or finance classes. Basically looking at account and see what happened for the past 5 years and see if there's any things that stick out or vary. We also have ratio analysis, which are relationships between different financial statement accounts or even non-financial data. So remember all those ratios that you had to calculate and do those numerator, denominator, what does that number represent? We can use those numbers for analysis and auditing as well. And then the one that I like to allude to, the one we're going to spend most of our time talking about, is reasonableness analysis. This involves forming an expectation using a model. Some of these can be very basic and straightforward, like the one we're going to do as an example. There can also be ones that are a little bit more complex, like the one for your homework. That one's a little bit a step up. I say a little more complex. It's definitely going to be a lot more complex than what we're going to do. And then there's some that are very complex and use specialized methods. Remember back where we did regression analysis in Dr. Otero's class? You can use that type of analysis for analytical procedures as well, because that's just developing an expectation based on statistical analysis assumptions. So those are all options that you have in there. So what is the goal of analytical procedures? Well, the idea is if we can develop, or if we can, this is going to be specifically with respect to developing expectations. So I guess I should probably back up. If we're talking about trend analysis or ratio analysis, generally our goal with those is to identify areas of interest or concern of the audit. So an example would be if I'm looking at gross profit and I see gross profit has been consistently 30% over the life of the company, and in the current period it dropped to 22%. As an auditor, I would step in and say, I need to know the reason for the drop in gross profit for the current period. And that would be something I'd have to investigate to make sure that something bad is not going on. Oftentimes, a drop in gross profit usually just means higher cost. If we saw like a spike in gross profit, like it went to 40%, we'd be like, okay, I hope there's not financial statement manipulation going on here. The other option is that we can use analytical procedures to develop expectations that can allow us to defer or eliminate later work. So the answer going to be is that we're going to develop an expectation. We're going to have a measure to determine if that expectation is close enough. It's called tolerable difference. And then we're going to compare that to the actual amount, the recorded amount. If our number's close, great, we're done, okay? If our number's not close, that gives us more information about what we need to investigate and why, okay? That's basically what we're talking about here. Now, what is this whole tolerable difference thing? Tolerable difference is basically related to the concept of material or tolerable misstatements. In fact, if we're testing an entire account, the tolerable difference will often be equal to the account's tolerable misstatement. So remember back in we were talking about this in chapter 3, and I said we're going to calculate tolerable misstatement for each account. This would be a number we'd want to know. Now, I want to make sure that we're clear on this. In absence of information about tolerable misstatement, you're going to use tolerable difference calculation. So there may be scenarios that come up on the homework and even on the exam where you're not getting information about tolerable misstatement. If tolerable misstatement is not given in a problem, you can ignore that factor, okay? It's only if it's given that you need to consider it. So auditor can use a rule of thumb or general guideline for tolerable difference. Tolerable difference is 5% of the entity's recorded amount, but not to exceed tolerable misstatement. This will be our default for this course. If you go on and you start doing work and more advanced work in auditing, like say, for example, you're going to take the CPA exam, you may see different rules that are in place for different examples. But this is our general guideline. We're going to say 5% of the recorded amount is our general guideline for tolerable difference. All right. So that's all well and good, but let's go ahead and do an example to kind of reinforce these concepts, to reinforce what it is we're talking about. So Earthware's 2021 income statement shows $983,000 of interest expense. We're going to conduct a substantive analytic procedure on this count so we can develop an expectation using reasonable analysis. Now, how do we do that? We're going to start with the ending monthly balance for the short-term line of credit and the monthly loan bank statement and the average monthly ending balance. Calculate the average monthly ending balance. Then we're going to determine the average interest rate for the year, determining short-term line of credit based on the bank's published rate and the monthly bank loan statements. We're going to multiply those two calculations together to come up with what we believe interest expense should be. And then we're going to compare those numbers using that tolerable difference calculation. So let's go ahead and do those real quick. This is not particularly difficult and you don't need to do all the calculations, but as long as you understand what I'm doing here. So we've got some information that's given in the book, and it basically says that the Earthware's general ledger says the bank balances were listed as follows, and these are in thousands. So on average, the bank accounts had an average of $19,242,000. The short-term line of credit, I should say. Short-term line of credit has an average of $19,242,000. And all that is taking the balances for all 12 months, adding them together, and then dividing by 12. That's all we did for that. Pretty easy calculation. I'm assuming that you remember from grade school how to do averages. More importantly, you remember from Excel how to do an average function. So yeah, you can do that as well. So that's an easy calculation for average. Now, further assume that interest rates recorded on the loan statements have remained stable over the year, fluctuating between 5 and 5.5%. So we're going to calculate an estimate for interest expense using this number here, and then some number based on these percentages right here. What do you all think would be a good percentage to use to calculate interest expense based on this information right here? Very good. It's very interesting. I'm never quite certain what the response is going to be because I've asked that question in previous classes and everybody's been like, I think I know what it is, but I'm not going to talk because I don't want to be wrong. You know, but 5.25 is correct. Okay. Often the simplest correct answer is the correct one. Simplest is the correct one. All right. So 19,242,000 times 5.25% is 1,010,000. That is what we expected interest expense to be. So we have an expectation and we have a recorded amount. Now remember, our recorded amount is 983,000. Is that close enough? The answer is right now, we don't know. Because remember, we have to have a basis for our expectation. We can't just use subjective judgment and say, well, looks close enough to me. Okay. That would be great if that's the way it worked, but it's not. Remember, we have to develop a tolerable difference, and our tolerable difference is 5% times our recorded amount. So we have to be within $49,150 in either direction. So is 983,000 within $491,050 of 1,010,000? Yes, it is. Okay. It's $27,000 difference. That's within our $49,150 difference that we can accept. So we can accept that amount. Basically, what that means is that once we've completed this, we can say, we believe that the amount that has been recorded for interest expense is a reasonable number. It is reasonably states what we believe interest expense should be. What if we contrast that to what would happen if, say, for example, my expectation was $1.1 million? Would I be able to accept that amount? No, that would be much greater than this tolerable difference of about basically 50,000. Okay. What would happen in that situation? That would be as an auditor where I would step back and say, I need to understand the reason why interest expense is so much lower than what we expected it to be. And we would focus on that area of testing to get more detail. So the purpose of the analytical procedure is going to be dual purpose depending on the situation. If we get an expectation that's close enough, we can basically say no more testing is necessary. Okay. Think about it from your own perspective. I said no more homework is necessary. How do you all feel about that? Yes. Yeah, that's how you're going to be like that. But What if you come back and I say, or you come back and you say, all right, the amount that we expected it to be is much larger than what it actually is. We need to make a determination of what the reason for that is. So it tells us direction. It tells us that we don't either need to do any more testing, or we need to focus more testing in this area because that's not consistent with what we believe it should be. All right. And with that, we're done with chapter 5. However, I had you all prepare for a discussion. So our discussion today is going to be over our types of evidence. And if you remember, I asked you to prepare 3 things. For the evidence that you were assigned, I want you to tell me what is the procedure for collecting this type of evidence. In other words, you just need to define the evidence. Which management assertions consist of a type of evidence test? Then you're going to tell me, is it traditionally considered to be high, medium, or low reliability, and why it's viewed that way? So you couldn't just look at my spreadsheet and say, oh, well, Dr. Barnes says it's medium, so you had to actually be able to think about it. And then finally, you're going to consider the 3 phases of the audit that incorporate audit testing, risk assessment, testing controls, and substantive procedures. Which phases might use this type of evidence? We've talked about this multiple times. Hopefully you took diligent notes on that and were able to pick that out. So let's go ahead and start out. We're going to start out with inspection of records and documents. And Olivia, you've got that one. So what's the procedure for inspection of records and documents?
Examining records, documents, intangible assets, including like reviewing invoices, contracts, like physical inventory. This type of evidence can test like all assertions. Good.
So this is going to be our primary test because it's going to be accounting records. We as auditors go in and look at the accounting records. It's going to be pretty much that be the case. Which assertions did you say it can test? All of them. Very good. Is it traditionally considered to be high, medium, or low reliability?
Yeah, I said it's because it can be subject to internal biases.
Good. So the auditor is going to have some control over it, but it is going to have some bias according to the client actually being preparing it. They can't actually manipulate it in real time the way they could some other tests, but it can still be manipulated. So it does have some subjectivity to it. And then which phase of the audit can it be used in? All of them. Yes, very good. This is our most flexible and powerful test overall. But then I started asking about specific areas of inspection records and documents. I asked about vouching. Zia, what is vouching? Okay, going from the journals down to the source documents. So that implies a direction, which means it must apply a management assertion. Which management assertion does this evidence test? Yeah, existence occurrence. Very good. Is it high, medium, or low? Yeah, because it's just an inspection of records and documents, but it's a specific type. And what phases of the audit can it be used? All of them. Very good. All right. Chandler, you got tracing, which is just the opposite. So what's our definition here?
So it's bottom to top. It's taking the source documents and looking if it's being recorded. It's the completeness or management assertions.
So when we say the word recorded, if something got recorded at all, that's generally going to be how we view completeness. Did it get recorded at all? So very good. What is it? High, medium, or low reliability?
Medium.
Yes, because
said it because you're relying mostly on management providing those documentation.
Yeah, good.
Have internal evidence. So
yeah. So it's still client prepared evidence, which creates some issues for us, but it is a little bit more reliable than some. What phases of the audit can this be used?
I mostly focus on risk assessment and controls because based on the size and how much work the entity does, it's kind of the risk setting for that, and then the controls saying if the controls are efficient, being able to record those accounts.
Okay, I would agree. It's very important in both of those. Can we use it in substantive testing?
Yeah.
Yep, we can use it in all 3. Okay. All right, so now we're going to have inspection of tangible assets, where I divided up some responsibilities. So Cole, what's the procedure for this?
Typically entails an auditor physically examining company assets,
Okay.
large assets like property, plant, equipment.
Yep, that's, yeah, for large assets, very specifically. We could use it for smaller assets, but the problem is, when we talk about smaller assets, usually it's much larger quantities, so inspection is going to be less reliable. Which managed assertions can this test?
Existence.
That's it, just existence occurrence? You want to argue with me on this one? No.
So,
Okay, you're absolutely right. Okay. All right. So is it considered to be high, medium, or low reliability?
high reliability because the auditor is the one that's actually confirming. all
Good.
that.
Yeah. So the auditor is doing the work, so we consider it to be high reliability, which is, yeah, it seems like that's kind of arrogant for us to think that we know better than everybody else. But yeah, that's the case. Austin, we have 3 phases that we could possibly use this particular type of evidence. Which phases can we use it in? Substantive procedures. You are correct. You are correct. Okay, so what's the reasoning behind that? Is because it is very focused on one area and one area alone. Most likely, we're trying to validate an account balance. We're trying to validate what is stated in the financial statements and looking at very large assets. Primarily, we only test account balances when we do substantive testing. Okay, so that's one big reason why we only use it during substantive phase. Very good. Observation. Nina, what's observation?
Observation is pretty much, going and physically looking at controls and procedures, making sure that, it is what management says it is.
Okay. Which assertions can this test?
It tests, like pretty much controls and procedures and, like verbal confirmations on what management says.
So the management assertions specifically for observations. So we've got completeness, existence, occurrence, authorization, and cutoff. Okay. So those are the ones that we need to be concerned about. Why does it not test valuation allocation accuracy? So going and looking at somebody doing something, can you confirm that a balance is correct or an amount, so transactions amount correct, so those values are correct? No. Same thing for cutoff and for classification and presentation. And rights and obligations doesn't really relate in there, given that it's only during one phase of the audit. So, or one category of assertions. So yeah, this is kind of unique in the fact that we only test these 4 assertions, which is really weird. I get 3 assertions because we're not counting authorization. Authorizations, again, that stepchild assertion. But anyway, Brett, considered to be high, medium, or low.
I have low reliability,
Why?
because it's pretty flexible and not super reliable, because like you can have an error, like you can see somebody doing it, but you don't know if it's like.
All right. Are you saying that if people know that you're watching, they might act differently? Yeah, probably so. Yeah. Okay. Yeah. If you know that I'm observing you taking the test, you're less likely to get up shenanigans during the test. Not you specifically, you generally. Okay. Yeah. All right. What phase of the audit can this be used in? All 3. It's very flexible. It's just not very reliable. What about inquiry, Jillian? What's that? Okay. And what assertions can this test? All of them. Yes, it actually provides evidence in all assertion areas. What's the reliability level? Why? So if I ask you a question that you don't want me to know the answer to, you could not tell me that answer. Is that what you're saying? Yeah. Okay. And then what are the 3 phases of the audit that we could use this during? Okay. So much like observation, it's very flexible, just not very reliable. Usually observation and inquiry, those are considered our lowest reliability test, and they usually require corroboration of information. Not always, but almost always require corroboration. All right, confirmation. Jared, what's confirmation?
So during the risk assessment, you figure out what accounts actually need the confirmation, and then throughout the substantive procedures, you'll do the confirmation.
Very good. Okay, what assertions can we test with this?
All of them.
All of them. Let's check and make sure. I think you're absolutely right, that confirmation. So all of these assertions, but this is interesting. I've got primary assertions listed here. So even though we test all of the assertions, we're primarily going to focus on completeness and existence occurrence. So you're correct in the answer, but we do have primary concerns. What is the situation when one would be primary of the other? That is an interesting question that we will get to when we start talking about the business processes. Suffice to say, depending on the account that we're trying to test, which is usually assets versus liabilities, Assets will be more concerned about existence occurrence. Completeness will be more liabilities are more concerned about completeness. But we'll talk about why that's the case in a little bit. The good news is that we can test multiple assertions simultaneously with confirmation, which is kind of cool. Hudson, what's the reliability on a confirmation?
It's medium because you'll have some bias based on who's confirming the
Mhm.
information.
That's right. Now, there's an important, interesting factor about confirmations that we're not going to get into too depth right now, but when we start talking about how do you do confirmations, one thing we need to note is to eliminate some of that or limit some of that lack of reliability. The auditor needs to keep strict control over who has access to the confirmations. Client should never touch a confirmation because that would increase that bias substantially and lower reliability. What phases of the audit can we use confirmations? Substantive procedure. And test of controls, right? No, okay, all right. Didn't fall for my trap. Yeah, so confirmations are tests of account balances, okay? Much like inspection of tangible assets, they're limited to testing the reasonableness of account numbers. So anything that's going to be limited to test of account balances are going to specifically be substantive procedures only, because that's the only phase that we can test account balance assertions. Very good. Recalculation, Madeline, what do you got?
The recalculation. To check the mathematical accuracy of a file, and it can be performed manually or electronically with computer assisted audit techniques.
Good, yeah. So we've got some tools that can really help us well with recalculation. What assertions are we testing? So it's 3 assertions, huh? Just one. Okay, VA is the same assertion. Okay, I'm being snarky. All right, so VAA, anything else? Nope, that's the only assertion. That's the only assertion. Yeah. What's the reliability of a calculation? Right, the auditor is doing the calculation themselves, so we consider it to be high reliability. Again, that high opinion of themselves. When can we use recalculations? Okay, so substantive procedures, absolutely, because we know we can use all of them during substantive procedures. Can we use recalculation during risk assessment? No, we have to have detail in order to do recalculation. We don't have enough detail. Test of controls. Test of controls is a bit dicey. Now, I will say that technically speaking, the way that I said for test of controls, the answer would be no. But I have also seen scenarios where people talked about using recalculation during test of controls. Usually that's a fancy form of reperformance. The problem with it being a test of control is that usually when we talk about recalculations, we have to have specific amounts, whereas test of controls are trying to determine whether an attribute exists. Is the control effective? Yes or no. So recalculation is usually trying to determine a result, whereas we're trying to answer a yes/no question with test of controls. So for the time being, we're going to say no. That being said, I would argue that there are some scenarios that some outside scenarios that we could use recalculation. Now, I don't want this to open up an argument where we say, well, you told Madeline that we could use recalculation during some test of controls, so that means that confirmation can be used as some test of controls. Let me repeat myself. Confirmation will never be used as a test of controls. Okay, never be used. Recalculation, maybe in very rare circumstances. Confirmations, never, all right? And I will stand on that hill and die on that hill, all right? So just keep that in mind. All right. Reperformance. Grant, what is reperformance?
Auditor independently re-executes a control or process that the client originally performed.
Okay, and that's good. What's assertions?
Our assertions are going to be everything except rights and obligations.
That's right, because reperformance is very heavily transaction focused. And our assertions, remember, our transactions and event assertions are all assertions except for rights and obligations. This way, what's the reliability of reperformance?
I see it's high.
That is correct. Why is it high reliability?
Because, the auditors with performance minimize a lot of things.
Yeah, so the auditor's doing the work and they're the ones who are actually making sure that everything works correctly, because we're the auditors. We're gonna say we're doing the work properly. There's no bias in our work. What phases of the audit can we use reperformance?
I think just, like, subs, retentive procedures.
We can use it as substantive procedures, but remember, reperformance is almost exclusively used, not entirely exclusively used, but almost exclusively used during which phase? Test of controls. It is very heavily used as a test of controls. which makes sense because if we can reperform the control and achieve the same result, we have a lot of evidence that shows that that control is working properly. So tester controls and occasionally substantive procedures. And then we finally have a wrap up with analytical procedures. Joe, you're up. What did you say analytical procedures are?
Powerful and versatile method for collecting audit evidence and obtaining assurance through like the trend analysis and ratio analysis.
That sounds like a summary of what I said in the slides. Well done. Well done. All right. So, what assertions can we test with this?
Completeness and then VAA.
Okay, I want everybody to pay attention here. Two assertions, completeness and VAA. Which one do we think is the more likely of the two that we're going to test in an analytical procedure? VAA, like 90% of the time, okay? The reason I mention that is that 90% of the time we're going to use the answer to that as being VAA. There will be at least one scenario in this course where we will come up with an answer that's not VAA. So completeness and VAA both can be tested by analytical procedures. Note, existence occurrence cannot be tested by analytical procedures because analytical procedures are very high level high level information. So we can move from the source to the top to come up with information about that, but we can't actually move the other direction down because we don't necessarily have the source to test that. So yeah, so completeness and VAA. What's the reliability, Troy?
It's medium reliability because it depends on the availability and reliability of the data being used for testing, as well as the possibility and predictability.
Right. So, and this is a little bit confusing because we're going to say, isn't this just a form of a recalculation? And recalculation are static numbers. These are estimates. Okay. These are largely subjective. So they're going to be implicit or have some implicit management bias associated with them. So analytical procedures are going to be less reliable than recalculation. Still nice because they're versatile and powerful, and they can actually eliminate some of our testing in some areas. But probably the most interesting question is, what phases of the audit can these be used?
Risk assessment, substances procedures.
Okay, very good. You didn't fall for my trap, but yeah. So we can use them for risk assessment for preliminary analytical procedures. We can use them as substantive analytical procedures. Is there anything that's any other area we can use them that are not one of those three phases? We can use them at the end of the audit too. Those are final analytical procedures. By the way, make a note of this. I forgot to mention this when we were talking about analytical procedures, but it's important to note. According to generally accepted auditing standards, both PCAOB and ASB, accountants are required to use analytical procedures during preliminary phases. They're required to do preliminary analytical procedures, so during risk assessment, and they're required to do final analytical procedures. The only place they're not required to use them is substantive analytical procedures, which is funny because that's when they're most commonly used. So again, just repeating what I said, during the standards with respect to analytical procedures, they are required to perform preliminary analytical procedures, so analytical procedures during risk assessment, and they're required to perform analytical procedures at the end of the audit, final analytical procedures. Substantive analytical procedures, not required, but generally a good idea. All right. That does it. Homework going to be due on Friday, so I'll see you all then.